Hi, Brandon Davis with DavisCPA Group. Today we're going to talk a little bit about the disaster that we're basically all facing as a country, the COVID-19 pandemic. I hope first off that everyone's taking the opportunity to do social distancing and really following government guidance as far as what you need to be doing to really protect yourself and others in this unprecedented time. I know a lot of people have been saying that I've been talking to in my client base, that this is unprecedented, and I think I've used that word more in the last couple of weeks than I have in my entire life. So anyway, what I want to talk about today relates to a few things that I'm getting hit with right now. I mean, today is Saturday, April 4th. Yesterday was the opening day for some of the disaster financing to be available through the Small Business Administration, more specifically related to the payment or Paycheck Protection Plan, or the PPP loan, as many of you might have heard it called. And so I want to speak today specifically about that. I want to talk about the SBA financing that's available out there besides that loan, and maybe how you go through that process. One of the things that we're seeing right now in regards to this PPP loan is making sure that you have all of your ducks in a row and everything ready to be submitted to your bank, because generally speaking in the past, SBA disaster funding has been handled through SBA directly, and it's been done through an online portal or an application process. But the interesting thing about the dynamic we're in today is this is a national disaster. Generally speaking, disasters happen at a local or regional level. Think about a tornado or a hurricane or an earthquake. And what happens then, the SBA and the government, the federal government, declares that particular area a disaster, which opens up the opportunity for financing and assistance to small businesses to help them get back into business, keep their employees employed, and what have you. Well, because this is an unprecedented event, and maybe that should be the title of this video, one of the things that we're looking at this time around is the fact that the entire country is looking for assistance at the exact same time. Not only is this putting a strain on our financial system and our economy and people being laid off and all these other terrible things are happening, but it's also putting a strain on the fact that we've got a lot of information coming from the government, and now we've got to figure out how to digest that, understand it, and get the information back into the SBA's hands and the bank's hands to get our financing. So I'm just going to hit some high points, particularly about the PPP loan. And basically I'm going to kind of maybe do a compare and contrast of some options. So right now we have the SBA that's going to kind of spearhead and is kind of the Small Business Administration, that's what it stands for, where the disaster funding is coming from. We basically have two buckets here. We've got the PPP loan, which this is a brand new program based on the current environment that we're in. And we also have what's called EIDL loans. That stands for Economic Injury Disaster Loan. Generally speaking, when there's disaster loans made, they're either EIDL loans or they're disaster loans relating to actual property damage. Well, in this case, in this particular environment that we're in from a disaster standpoint, this is an economic disaster, right? There's no damage to property and such. So that's why really the only two options that we're looking at is the EIDL and the PPP. So the EIDL loan I'm going to talk about second. Let's focus on the PPP loan right now and what that is. The first thing I want to say is these are mutually exclusive. If you apply for the PPP loan and want to go that route and accept those funds, then you cannot get an EIDL loan. If you apply for EIDL loan, you can't get a PPP loan. Well, how you figure out which one is best for you is there's a lot of factors to consider, and you want to consult. Not only you want to talk to your banker, you want to talk to your attorney and your CPA or other financial advisor and kind of your business team to figure out what's best for you. Most businesses are looking at this PPP option and they're applying as we speak. And so you want to get your application together as quickly as possible. This loan is basically the first thing that you'll see out there is forgivable, meaning that if you meet certain criteria, the loan is forgiven, including interest, and you don't have to pay it back. The loan's got to be used for certain things, however. The name of it, again, Paycheck Protection. So 80 or 75% of the loan proceeds have to be used for payroll, okay? That's step one in order to be forgiven. And pardon my writing here. 25% can be used for other things like utilities. I'm just going to abbreviate rent and interest, expense, those sorts of things. Now, how you determine how much you're eligible to borrow, that's the big thing you got to think about whenever you're looking at this loan versus the other one. The PPP loan has caps on what you can borrow. And so the second thing to think about on this particular loan is how much you can borrow. So what the borrowing capacity is on the PPP loan, and I'm going to talk about this at a high level. There's a lot of guidance out there, and there's a lot of guidance that's changed, and some it still may be in flux as we speak today. But at a high level, if you've been in business for the majority of 2019, or say all of 2019, you're going to take your 2019 payroll information, or the wages that you pay to your employees. You're going to include any health insurance premiums that the company paid, any retirement plan contributions that the company paid, not the employee portion. You'll roll all of that together, and basically we'll take that number for the entire year. If you've been in business for all of 2019, you'll divide it by 12 to get what's called your average. I'm going to erase here and give us a little bit more information, because you've got that. You're going to take to figure out what your average monthly payroll is. So we find out your average monthly payroll, okay? And then the next step is to take that number, that average monthly number, times 2.5. And so that equals what your total loan amount that you can apply for is under the PPP program. Then you would basically then provide a tremendous amount of support to your local bank, because one thing about this particular program is it's not going through the SBA directly like generally disaster loans do. This is being administered at bank levels, and it's got to be banks that have SBA lending authority, a relationship with the SBA to do this funding, which the majority of them do. And so from there, this money would be available. Again, you take your average monthly payroll for the last 12 months, or 2019 is generally what people are doing, times 2.5 times. That's your loan amount that can then be advanced to you. Now, the catch on the loan, in order to be forgiven, is those funds, once they're given to you, they have to be used, like I said before, at least 75% of those funds to pay for payroll, and 25% can be used for utilities, rent, and other, so utilities, rent, and then mortgage interest or interest expense if you have that as well. And so you've got to do that, though, over a course of time. The 8 weeks following the day you get the funds is when the clock starts to expend those funds towards these items. That doesn't mean you have to, spend those dollars and show where they're spent. You just have to have at least that much spent in an 8-week period of those funds to kind of cover that. Now, you say, well, what if I don't? What happens then? Well, the loan's not forgiven then, and you have to apply for the forgiveness to a bank. It's not a guarantee, or it's not automatic. You have to apply to the bank once you go through that period of time to request it be forgiven. They verify that you've done the things that you said you were going to do and spend it how you were supposed to for that forgiveness, and they have 60 days then to give you that information back, or to give you an up or down answer. Well, if it's not forgiven, not all is lost. This is still a great program. The interest rate's 1%. It was going to be 0.5%, and they actually raised it to 1%. Well, that's great. 1% loan is a nice, affordable, cheap money. Also, it's a situation where it's paid over 10 years, and so got a long amortization. So there's some really good things, even if it's not forgiven, that make this a worthwhile option. Now I'm going to switch over and talk about the EIDL loan. The EIDL loan, again, is Economic Injury Disaster Loans, what that stands for. That is applied through the SBA. And you actually go to the SBA's website online, and if you just Google SBA disaster loan, it'll take you right where you need to go. And there's a COVID-19 spot to click on, and you fill out the information on this. Basically, in the initial process, they've really streamlined it, because they changed it 3 times, it seems like, as we kind of went through the process of figuring out what to do online, just because so many people were applying. Now it's a fairly easy process. You enter your business information, your gross receipts, cost of goods sold if you have those things, just kind of some high-level financial information, the ownership of the company. You then, at the end of the questionnaire, you ask some questions about being a U.S. citizen, not being in trouble with the law, basic questions to make sure you qualify to be able to even get SBA funding. And then once you get to that point, at the very end, you can actually request for an emergency $10,000 to be considered sent straight to your bank account. And so once you do that, then you submit it, then the application goes to the SBA, they're gonna process those and they're gonna get back to you to say, okay, now let's figure out what your loss is. The thing about this loan is you have to be able to show an economic loss in order to be able to get economic relief funds. Meaning, if your business goes down 50% in revenues this year versus the same time last year, that's a documented economic loss associated with the COVID-19 pandemic that we're facing. And so you'd be able to then to quantify that. They're going to work with you to get those details and work through that process and get you that funding. Now, this funding is not forgivable. However, it's likely going to be more in dollars than this one if you have a major damage or major issue with your business being affected by the COVID-19. That's why I think this is going to be a good fit for a lot of people, even though a lot are jumping on this bandwagon right now. The people I think that need this one or should apply for this one are businesses that aren't terribly impacted, or they don't know that they're impacted yet, right? I mean, this is going to be a trickle effect. You know, the people that have been impacted most recently are, retail industry, food and beverage, hotels, the travel industry, those that basically, have masses of people in their environment where there could be a spread or an easy outbreak or transmission of the virus. So because those businesses have been impacted so badly, they need this kind of relief. The ones like myself who have clients that are severely impacted, but maybe I haven't been impacted so much yet. Maybe I will down the line though. Some of my clients unfortunately have to go out of business, and so that reduces my revenues. So this is an option for me or other businesses to say, let's try to get something in play to keep our employees employed, because we're hurt, but maybe we're not hurt too bad to where we would need more money over here. Now, the other thing I want to point out on this one is it's long-term financing. Usually it's amortized over a 30-year period. The interest rate's around 4%. So this is going to be a higher rate. But again, it's going to be a lot higher dollar amount potentially when you go borrow those funds. Something else I want to point out too is this EIDL option. When you go through this route, say you've already went down this road and you filled out this application and you requested the $10,000 to come back, but you haven't heard from the SBA yet, and you're really kind of interested in this too. Well, you could apply for both, but you can only basically pick one. And so say, for example, you do this, the SBA advances you the 10 grand, but you apply for the PPP loan, they'll roll this 10 grand into what they were going to give you over here. So you're not all is lost if you've already applied for this and you really want to maybe circle back and look at this option as well. So again, this is kind of a high level look at the two different options that are out there right now with the SBA from the standpoint of funding and things that are critical to maybe helping your business. Other things that the government has done, obviously you all heard in the news about the stimulus checks that are coming out to individuals. That's going to help, obviously, with the economy a little bit. It's going to help put some money in people's pockets that are out of work, because we're at 6.6 million plus in unemployment at this point. Other things that we need to think about too is, there are a lot of things that I get questions about related to the payroll taxes and the payroll tax credit and what that looks like. There's a couple different options there. One of them has to do with and in fact, I may even talk about this in another video, but there's other, in a little more detail, but there's other incentives out here that the government's putting in place that's going to help us that we need to consider. And so anyway, I just wanted to get online as quick as we could and get a video out here about the SBA programs that are available, and these are our options.